Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, alongside Katie Greifeld, we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television, radio, as well as on YouTube. And quick take, Carol. An S&P down about 1.7%. NASDAQ composite down about 2%, and the Russell now down almost 3%.
Yeah, really no place to hide in this market environment. What's interesting is the worst performing major industry group in the S&P 500, there are 11. At the bottom of the pack, energy, which we know has continued to outperform, still outperforming for the year, but nonetheless, investors even running from that space. We know there's geopolitical reasons why, among other factors, concerns about over in Europe in terms of energy supplies. That group, though, down almost 3%, Tim.
We just spoke to Rick Pitcairn, Chief Investment Officer at the Pitcairn Family Office, who said that this is an opportunity over the next 6 months that if you got cash on the sidelines and you've got a long-term time horizon to get in there. He said, not broadly speaking, though, he did say to avoid those high-flying tech companies that really excelled in 2019, 2020, 2021. He said it's going to take longer for those types of companies to recover in a higher rate environment.
Well, we were just talking to Lori Hein over at State Street Global Advisors. She's still overweight cash. I thought that was such an interesting conversation. It's coming out of the fixed income portion of the portfolio, though, Romaine, not necessarily from equities. Yeah,
and I think that really gets to the idea here that while there are bargains to be found, a lot of people do think we're into a recession next year. We're in for a prolonged economic downturn. So is it too early, I guess, to deploy that cash? I guess it depends on what you're investing in and who your clients are. As for today here, we'll walk you through the numbers really quickly here. A Dow Jones Industrial Average going to finish the day down by about 1.4%. The NASDAQ down almost 2%. We'll call it about 1.9 as we wait for these numbers to settle. A broad-based sell-off in the S&P 500, though, with only about 30 stocks in the green, the rest in the red, down about 73 points or 1.8% here on the day. And the biggest laggard of the day, at least among the major indices, that belongs to the Russell 2000, Carol, down about 2.8%.
Those small caps taking a beating as well. If you look at the S&P 500, 472 names to the downside. Take a look at the NASDAQ 100, Katie, and you had 97 names losing ground. So again, speaks to investors really selling out of almost just about everything today.
Well, I don't have any better news when we look at the industry groups. It is all red. I dressed accordingly. All 24 groups lower right now. At the bottom, you have autos. A lot of that is Tesla, that big fall that we saw there. Up at the top, it's utilities being the least bad. I'm not sure how to phrase that. But in any case, utilities still off by about 0.6%, Carol, just broad-based selling.
All right, so let's get to some of the gainers. I did find some.
You
cross
found
my
some?
Fingers. Yeah, I did, and they actually held on to their gain. So MGM Resorts International was up more than 4% at its highs today, finishing the day just shy of a 2% gain, but nonetheless among your top gainers in the S&P 500. Truist upgrading the casino operator to buy from hold, and amid renewed optimism on China reopening, and that's why you saw this name moving higher. Keep in mind, last week we did get some headline news out of Macau and 2022 gaming revenue on track to be the lowest on record, but I think perhaps maybe the worst is over as maybe we see some easing on those COVID-0 policies in China. So MGM certainly a standout. Take a look at the NASDAQ 100 today, and you had a lot of Chinese names that trade in the U.S., those ADRs. They were the top gainers in the NASDAQ 100. Among them, Baidu, that was number one in the NASDAQ 100, up 2.7% in today's session. Again, goes to those expectations. We're seeing more signs of those easing of the COVID-0 strategy in China. Major cities, including Shanghai and Hangzhou, easing restrictions. So again, some optimism about specific Chinese names. And then we had one, a biotech company. It's kind of a small cap. It's about a $1.3 billion market cap biotech company, soaring 17%, up as much as 23% at its highs, but finishing the day with a 17% gain. This after a board member bought $65 million worth of the company's shares. That happened on Friday. We got the filing. It's still about 12% of the float is shorted, and it's still down more than almost 60% year to date.
Well, 473 names lower in the S&P 500, Carol. probably had a much easier job finding decliners today. We got to start with Tesla, Romaine. Finishing the day down by more than 6.3%. Shares dropping the most in 2 weeks. This after a Bloomberg report that the company plans to lower production at its Shanghai factory. This is the latest sign that demand in China is not meeting expectations. We should note that a Tesla rep in China declined to comment, but Shanghai Securities News reported that the planned cut in the Chinese plant's production is, quote, false information. They cited unidentified people familiar with the company. And then Salesforce continues to see an exodus of the top names, top executives there. The latest among them, Stuart Butterfield, who has been at the company for less than 2 years. He was the founder and CEO of Slack. He's exiting the company, he said today. Salesforce finishing that down by 7.3%. We did see 2 other veteran Slack execs also leaving the company as well. And you'll remember last week, after the company reported results, we saw Brett Taylor, the co-CEO, say he'd step down at the end of January as the co-CEO of the company. Yeah. And then VF Corporation, down more than 11%, the biggest decliner in the S&P 500 on a percentage basis. This is a company that owns Vans, Supreme, the North Face, Timberland, and more, falling the most in more than 2 years after cutting its forecast on weaker demand in North America, also announcing the retirement of the chairman and chief executive officer, Steve Rendell. Romaine.
All right, a lot of activity right now actually going on in the debt market. On the back of that hot ISM services reports here, you're looking at pretty significant drops in yields that we saw, jumps in yields, I should say. The 2-year yield up about 13 basis points on the day. The 5-year in the belly up about 15 basis points as well. Your 10-year up about 10. And we should point out that some of the inversions that we're seeing on some of the key parts of the curve are pretty significant here to note. A 2-10s curve now at -81, so that's back down to the lowest levels that we've seen going back to 81. And if you take a look at the 5s 30 and the 2s 30s, the 2s 30s curve, that's now back down to its lowest level on record.
I want to talk about the 2s 10s. I'm dying to talk about it. Yeah, it's 81 basis points of inversion. I was listening, BMO.
I just said that, yeah.
I know, but BMO has this great podcast. It's called Macro Horizons.
Okay.
They're sticking to their call that the 2s 10s curve is going to reach 100 basis points of inversion, which seems really dramatic. I mean, that has to be a record in all time, but that's going to come from the 2-year yield getting to 450, 10 staying around where they are, around 350 or so. Big call.
All right, so I want to get to some headlines crossing the Bloomberg terminal. It's coming from the FTC investigating crypto firms over misleading advertising. The Consumer Protection Agency says probing possible misconduct. FTC confirming the inquiry into crypto marketing in a statement, so putting it out. No surprise, Tim, considering the headlines, the stories, the reality of what we've seen over the last couple of weeks with the collapse of FTX and Sam Bankman-Fried.
Yeah, but I mean, the question is to what extent can the FTC actually, work on companies or fine companies or have control over companies or admonish companies that aren't here based in the United States. So, that's a big question to consider when thinking about this in the context of what we've seen with FTX International, which of course is the backdrop here.
Well, I mean, but this is the CFPB, so we're talking about the actual marketing of it. So, I mean, any U.S. investor who is touched by this, gives them, to a certain degree, authority to go after this. I mean, we'll see if it means anything. I don't know who you go after. Do you go after SBF? Do you go after, Tom Brady? Do you go after, Larry David? Who do you go after?
Hopefully not Larry David. I mean, on a personal level.
He is lovable.
You're waiting for season 12 of Curb? Is that your excited?
That would actually give him a lot of fodder for the next Curb Your Enthusiasm, right?
It would be like a whole season, right?
I think so.
That would
see
be
it playing
good.
out.
But that gets back to this, again, alphabet soup of who actually regulates crypto here. And if they miss the ball, are we going to see more of these sort of enforcement actions come out of, these scattered investigations? It's going to be pretty busy couple of years, I would imagine.
Well, who owns it, right, ultimately? And I think this speaks to also, what is it, right? We often talk about this when we're talking about crypto as a basket, like we're just throwing this all together. But you know what I mean? Like, we're still having these questions about what is it? Is it a currency? Is it a collectible? What exactly is it? Then who has ultimately the oversight?
Well, but that raises the issue, too, of whether that even matters. Because I think at the end of the day, if you're marketing something, if you're trying to sell a product, whatever the use case is, if you're doing it in a way that is dishonest, and I put that in quotation marks, or in some ways maybe fraudulent in certain respects, then it's kind of moot what your intent was.
Well, the rebuttal from the Bitcoin maximalists, the maxis on Twitter, would be, this isn't Bitcoin's problem. Yeah. This is the fact that you have all of these companies that were created around this ecosystem. This doesn't actually have to do anything with the Bitcoin blockchain necessarily that went wrong. It's just these companies
but it does.
You believe that?
I mean...
Well, wouldn't purists argue that, the more layers that get into it kind of gets it away from what this is supposed to be ultimately about?
Well, that's the thing when you think about companies such as Coinbase, the fact that their stock has just been annihilated, it's because you have a lot of people saying, go back to cold wallets. Why are we on these exchanges when we should be?
Can you let Tim speak? I watched your crypto in IRL show, and you never let him speak. Yeah.
Hey, the thing that I'm thinking about, though, is the wider damage that all of this does to just crypto in general. Because if you wipe out a company like FTX, which is among the largest crypto exchanges in the world, I mean, shouldn't a company like Coinbase be doing really well? But investors are just concerned that, okay, well, everybody's scared away of crypto in the wake of this. So you don't have new adoption. You have people running away saying, okay, we watched this for 2-3 years. We're ready to throw in the towel here after something like this.
All right, well, make the fundamental case at some point for investments in this.
You're talking to Katie, right?
Well, yeah, all three.
What I would say is people are they're running away from these exchanges. They're going back to their cold wallets. You've got
so easy to use cold storage, right?
Cold wallets.
There you go.
Can I buy pizza with crypto? That's all I want to know. All right.
Where's your cold wallet?
In the freezer. All right. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and on Bloomberg Quick Take. We will see you guys beyond the bell, same time, same place tomorrow.